So good morning, good afternoon, everybody, and welcome to another of our interviews for Digital Infrastructure Investor. Today, we are joined by Hebert, who is Senior Analyst for TMT with Credit Sites. Davis and I have known each other for quite some time. We both mountain bike and a few other things. But so first question, Davis, is the easy one, is who is Credit Sites and what do you guys do?
Well, first of all, I'm a credit research analyst. I focused on the telecom sector. I've been doing this for most of my nearly 20-year career. When I started, the CLEC bubble was still growing and then it burst. So I was doing a lot of the CLEC cleanup when I was at a lowly analyst at Wachovia in those days. And joined high yield research with Wells Fargo in 2007, so just before the financial crisis, and spent the last 13 years in the high yield research group at Wells Fargo. And then just last month, I transitioned to a new role here at Credit Sites, where I'm again focused on the telecom sector. Credit Sites is an independent research firm. So we distribute our research to around 15,000 clients around the world. We have a presence in London and Asia Pacific. It has a 20-year history, celebrated its 20-year anniversary this year. And really the focus is to provide high quality research focused on the credit markets, and that's unbiased. So we're not affiliated with any sort of bank or brokerage firm or anything of that degree. So it's really an exciting opportunity for me, and I'm excited to join the platform. And here at Credit Sites, I focus on names like AT&T, Verizon, T-Mobile, Lumen, formerly known as CenturyLink, and Dish, among many others. So that's kind of the scope of my universe and what Credit Sites does and what we do for clients.
Okay, great. And we'll talk about those names as we go through today. So you and I are chatting here at the beginning of December. The C-band auction actually started yesterday, so we're right in the early phases here. You've just published a very big comprehensive report on the C-band and the economics of it and bidding expectations. So can you guys put an overview of what you're expecting as a whole, and then we can dive into some of the participant companies. But what are you expecting overall?
Sure. Well, I'll just start by saying I think it's probably one of the most anticipated spectrum auctions, going back to probably the 700 megahertz auction. What was that, 2008 or 2009? So, the FCC under Ajit Pai has been very proactive about freeing up spectrum for 5G, starting with 600 megahertz in 2017 with the low band piece, then moving to millimeter wave. I think millimeter wave raised about $7 billion across, all three of those auctions. And then when you look at CBRS, that was about $4.5 billion. But in our report, we called C-band the real MVP. So we think this spectrum is just very, very interesting for carriers and service providers out there. First of all, it's 20 megahertz subblocks. It's unpaired, so they can, be more dynamic in how they use that for downlink. And so it's just a very, very attractive block of spectrum. And so we think this one's going to bring in a lot of money, a lot of capital is going to be put at risk here as we delve into the 5G world. Our estimates, including the payments that are going to be made to the satellite incumbents of 9.7 billion, as well as the clearing costs of 3 to 5 billion, we anticipate the full bill at the end of the day is going to be about $38 billion in total, and that equates to about 43 cents per megahertz spot.
Right, and I think that's one thing a lot of people forget in this auction is that the payments going to the satellite companies come from the bidders, and also they've got to pay for that relocation, right?
That's right, yes. So that's going to be cleared in two phases. There's a phase one, which is the 46 of the top 50 markets in the A block. That's the lower portion of the C-band spectrum, and they are being incentivized through this $9.7 billion package to clear that by December 2021. So that's on an accelerated basis. So if they hit those targets, they get rewarded. Secondly, there's a phase two where if they clear the rest of A block as well as all of B and C block, then they get a much bigger payment in December 2023 to incentivize them to clear that as quickly as possible. If they don't clear it by those timeframes, then they don't get paid. So they are, they're incentivized to clear that as soon as possible.
Yep, yep. And of course, as soon as they clear it, then the successful bidder there can use that spectrum for 5G. So let's talk about the some of the carriers here. So let's start with Verizon. Their name usually comes up when we talk about C-band. People say that Verizon needs it. It's short of mid-band spectrum. As you said, it's got 700. It was a big participant in the millimeter wave auctions a few years ago. But it does lack that middle band here, which obviously C-band provides. And to be fair, Verizon was actually quite active in the CBRS PAL auctions in the summer. So what are you expecting for Verizon, and how does it affect their debt loading, as you currently see the company?
Well, you're right. Verizon needs the spectrum. That's been no secret, although Verizon, hasn't been super public about how sorely they need it. But our estimates are, and this is using data from others, but 85 megahertz of mid-band spectrum, and that's including CBRS, belongs to Verizon. That's the lowest of the big four carriers, if I'm including Dish in that as well. So they have a commanding position in low band spectrum with what they've done with 700 megahertz, and they also have the cellular spectrum going back to their days as an ILEC. And then they have a commanding position in millimeter wave. So it's that nice middle layer that they're sorely missing. And so they are going to play to win. A lot of the 5G strategy Verizon's had, I think, has been, let's just make it to C-band. Let's get a bridge to C-band, whether that's the dynamic spectrum sharing or DSS, the millimeter wave 5G in certain areas. But C-band is really going to be the cornerstone, I think, of Verizon's 5G network over the next decade. And, they're coming into this with a leading market share position. So, one thing we mentioned in our report was Verizon's in it to win it, which, they want to continue to have a commanding lead in the 5G world as well. So what we're expecting from Verizon is about 17 billion of total spending. And now we do think most of that's going to be focused on the A block, because that's going to be the spectrum that's cleared the most quickly by December 2021, at least in the 46 of top 50 markets. Mm-hmm. What's interesting is the rating agencies have sort of given some goalposts that I'm aware. Whereas Verizon's bondholders have been expecting to upgrade to the A- rating from BBB+, and they've been talking years about this since they took Vodafone out of Verizon Wireless. And so this has been a goal and an intention for Verizon for years to get to this level of A- rating from S&P. And so they are definitely mindful of that coming into this auction. They have the sort of, the number in mind, I think, where they would delay that upgrade, I think would be more than 15 billion of total spending. So 17 billion would put them over that mark. However, one thing is interesting is that the payments are not made to the satellite operators for phase 2 until 2023. So Verizon could probably delay at least 2 to 3 billion of that number into 2023. So they might be able to sneak under that $15 billion number just on the payment timing outlay, which would still put them on pace for that upgrade.
Right. So they could get what you're saying is they could get a combination of phase 1 and phase 2. If the total was 17 billion, maybe, I don't know, 13 billion or so could be phase 1, 4 billion could be phase 2, push that out and then still get their upgraded credit rating.
Right. And I think if they spend 15 to 20 billion, it probably just delays the upgrade for some time. Mm-hmm. If they spend more than 20, they might see their outlook go from positive to stable. So that would be a bit surprising, but there is a possibility that Verizon says this is our one shot to get a commanding lead in 5G and just go for the gold. I suppose that's possible, but I have been asked about the cost of capital is as low as we've ever seen it with rates. Why not? And it comes down to really the promises they've made to their stakeholders to get this rating to where people expect it.
Yeah, yeah. All right, so AT&T, slightly different situation, bigger company, quite a bit bigger company these days. And actually a very different company from when they were active in the AWS auctions that you and I went through, the 700 megahertz auction, 600 megahertz. AT&T didn't participate in the CBRS PAL in the summer. But when I look at, I'm an industry analyst, I look at AT&T and the first thing I see is debt. So can they afford the C-band? I mean, that's the base question here, right?
They can afford to play in the C-band auction. I would say I'd say their stakeholders would be surprised to see them not participate or not bid because this 5G C-band spectrum is so important. I don't think they could spend to the level of Verizon, but they have a lot of balls in the air right now. One is selling DirecTV. So if they are able to sell at least a stake in DirecTV to private equity, that could bring in some much needed cash to help fund the C-band spending. The rating agencies, again, this is hugely important in the investment grade corporate bond world, have kind of given AT&T around a $10 billion limit to spend in the C-band auction without any sort of negative action. So whether that's a downgrade or a negative outlook versus a stable outlook. AT&T doesn't really want to test that, I think. So I think the 10 billion is a pretty good prediction in terms of what their limit may look like in this auction. We do anticipate AT&T spending close to 9 billion in total. But again, to your point on the phase 1 versus phase 2, we think AT&T could potentially delay some of that payment timing if they go for more of the B and C blocks into 2023. We anticipate they could spend 5 to 6 billion in 2021, and then they could move about 3 billion out to 2023. So that could really limit the impact on AT&T's balance sheet if that's the way if that's the strategy they take in the C-band auction.
Right. And they actually do have some mid-band spectrum already, right? They've got, as I mentioned, they've got the AWS, they've got WCS as well at around that, 2.3 gigahertz. So they're not quite in the same situation as Verizon, although they don't have the holdings of T-Mobile, which we'll come to next, sitting on that swath of spectrum, Sprint spectrum, the 2.5 gig. So what role do you see T-Mobile playing here?
I would say we expect a moderate role, T-Mobile to play. And again, I come back to I think all these carriers need to have a foot in the door with C-band. I think not having any C-band would be a mistake only because it's going to be a cornerstone for 5G networks for the next decade. So I think they'll play to a degree. I think we've estimated about a little over 4 billion in total spending. They're walking into the auction with about 11 billion of cash, and that includes a delayed draw term loan that they raised last, I think it was in October. So they have enough liquidity and enough access to capital to get aggressive if they choose to. So it remains to be seen. But you make a great point. They have a lot of mid-band spectrum already. I think in our report we said 260 megahertz of average nationwide mid-band spectrum. That's close to three times everybody else. They have essentially a 2-year head start when you think about T-Mobile's goal of reaching 200 million pops with 2.5 by the end of 2021, and Verizon will just be getting their hands on C-band at that point. Right. So they're at a head start, and I think that's a great headline. It's going to be interesting to see how quickly people move to 5G service, and whether that's a big difference maker for T-Mobile in this day and age. So we'll have to see, but I think they'll participate modestly. I think they do have balance sheet flexibility, but it's more of a question of resources and whether they allocate those resources more to 5G build out versus spectrum purchases.
Mm-hmm. Yeah, and I think with T-Mobile, it's interesting because they are sitting on that 2.5 gig spectrum, which they have a lot of it, as you said, they've yet to action, right? They've yet to actually build it out. Right. They do want some C-band, but they know Verizon and AT&T need more, especially Verizon. So their role of playing the upset here of just bidding up just to make Verizon pay more makes it a little bit more interesting, right?
All right, I think the carriers want to make sure Verizon doesn't walk away with spectrum, for a low ball price. So they're going to be active and ensuring, I think Verizon pays a handsome price at the end of the day. And you haven't gotten to Dish yet, but Charlie Ergen loves to play that spoiler role. So
yeah.
um,
Well, let's talk about it. I mean, you and I have both looked at Charlie Ergen, spoken to Charlie Ergen many times over the years, and you're right, he keeps his cards very close to his chest. I'd hate to play poker with him, but he does love to come in and upset the apple cart and do the unexpected. So what are you expecting there?
Well, expectations always end up very different than reality with Dish. I can think of past auctions where we came in with modest expectations and Dish completely surprised us. I think we knew that they would spend big in AWS3. I think we were surprised how much, and obviously they got the small business discount that was later ruled ineligible by the FCC. So that's a whole nother story, but they did surprise with 600 megahertz. They got the second largest amount of spectrum in CBRS behind Verizon, or at least they spent the second largest amount, close to $1 billion there. They participated in one of the millimeter wave auctions. So right now we have them slotted for $2 billion, but I wouldn't say I feel confident about that number. I think Dish probably has more flexibility in its balance sheet that people give them credit for. They're walking into the auction with a little under $3 billion in cash, but they have debt capacity if they chose to spend more than people expect. And Charlie Ergen is he's pretty clever. He's going to look for bargains where it's available in this auction, and it wouldn't shock me if he spent more than our number. So we'll just have to wait and see.
Right. So you said they've got $3 billion in cash. They've also got to build a network yet. I mean, you've got to remember they don't have a 5G network yet. They have a lot of spectrum. Is there enough room in their debt limits to actually spend a little more, let's say $4 billion for the sake of argument, and still build a network which could cost them up to $10 billion? Is that a possibility?
They definitely don't have as much flexibility as the prior three we've talked about, primarily because they're much smaller. And when you look at EBITDA by company, Verizon and AT&T are $50 billion EBITDA companies, larger for AT&T and a little bit lower than that for Verizon. So spending $17 billion doesn't move the needle that much on leverage. If Dish's EBITDA is right around $3 billion. So, if it spends $3 billion, that's a full turn of leverage. And so that they have far less financial flexibility just from that metric alone. So I think, anything beyond $3 to $4 billion, I think for Dish would be seen as a negative sign, I think for bondholders, at least is the way we're looking at it right now.
So the last one we have to talk about is the cable MSOs, and you and I have discussed it many times over the years. Every time we have an auction, the question comes up, are the cable guys going to play? Oh, the cable guys will be big. Are they going to spend big? And we go through it and nothing happens. And the same is happening now. I saw the other day is discussion of C-band and the C cable companies participating and how much they're going to spend. And from my perspective, why now? They didn't do it in 600, 700, AWS, CBRS. So what are your thoughts? What do you expect from the cable MSOs?
So I think that, as you said, cable's always been a wild card and they've always sort of disappointed. So they're sort of the opposite of Dish. I don't think I expect them to do much here. First of all, I'm just not really sure about the bidding strategy of having Charter and Comcast under one joint venture. The cable footprints are a little bit more like Swiss cheese. So, I think the larger PEA, the way this spectrum is broken up by territory, doesn't play in their favor. They'd end up buying spectrum that they may not need in certain parts of their footprint. So honestly, I think the title of our cable section in our report was, stock buybacks look better. So they may, because they are involved in 5G and in wireless networks with the Verizon MVNO and whatnot, I think they do have to have a toe in the door, a foot in the door, if you will. But I don't anticipate they're going to spend big.
Right. So what other areas are you looking at within TMT? Obviously, we talked about C-band here quite a lot, but what other areas do you look at?
Well, in the wireless space, one interesting area I'd like to spend a little bit more time on is Legato. I think they have an interesting piece of spectrum. They did a recapitalization earlier this year, and I think people are hoping that there's a lottery ticket there with getting the FCC blessing. I'm a little skeptical only because the Department of Defense, anytime the Pentagon's involved and the Pentagon is against something, that usually doesn't, fly well in DC. So I guess I'll believe it when I see it if the Legato play is real. But that's certainly an interesting area to watch.
Do you think do you think that Legato has to happen before the inauguration, or do you think the new administration is going to look at that a little differently?
I'm not close enough to know. I think that sounds a little bit too much of a rush job, if you will. But something to watch at any rate. And that certainly has people buzzing about this national 5G network, something we've never really believed in or bought into, but certainly something to talk about. I think the other interesting place we're looking closely at is the fiber space, and the multiples being paid in the fiber space are fairly large. You're looking at high teens, even 20 times. I think we've seen for smaller footprints, even 30 times cash flow. And it's going to be fascinating to watch as these 5G networks densify, how these multiples are justified and how they monetize. It's a little bit less straightforward than, say, a tower business or a data center business, if you will. So that's going to be something very interesting to watch. I remember, Iain, I think maybe you were at this dinner a few years ago at one of our 5G forums, and the infrastructure guys, whether it was data centers or towers or fiber, they were ordering wine, having a great time, and someone said, well, what does Wells Fargo think about all this? And I said, I just want to know who is going to pay for all this, because the carrier valuations and from Wall Street's perspective never move. No one seems to believe the 5G revenue verticals are going to happen, yet they're supposed to pay for all this infrastructure build out. So that's going to be something interesting to watch in the 5G world, is how these new revenue verticals come about beyond just consumer mobility, because the ARPU trends have been fairly flat, nothing too exciting.
Well, we do consumer surveys, as you know, and we've asked people, regular consumer, will you pay more for 5G? And the majority of people say no. So some people will pay up to 10% more per month, but that's a $60 ARPU becomes a $66 ARPU for some people. That doesn't give you $5 billion or $10 billion to go put into an upgraded network. So it's a good question. And again, we come back now to the debt rating. You look at the debt loading of the carriers already, bidding on spectrum, Verizon at 17 billion, then they've got to go action that spectrum. Right? Spectrum does you no good when it's it's a license from the FCC. You and I can't use it as consumers. So there's certainly more spending there.
I mean, it feels a little bit like, this is a dangerous thing to say in telecom, but if you build it, they will come. If I build a great network, there's going to be amazing, new opportunities and new businesses that come about from that. And, just think about what came about out of 4G and wireless broadband. And there have been some amazing businesses that have come out of that. And I think the idea around 5G is that translate more into the enterprise and IoT world. So there's all kinds of, back to the future kind of ideas we can think about. But monetizing them is a different story. So that's something really exciting and interesting to watch, I think, in the industry over the next, several years. And from a credit perspective, you're right. I mean, we're focused on cash flow and how much CapEx they're spending, and, are they getting the revenue bang for the buck, if you will.
Right. Now, I think another interesting aspect here as well is that, if you mentioned the verticals, the private networks with enterprises, they can use CBRS, they can go buy equipment, they can get fiber, they can get a data center, they can get the cloud, they can get the edge compute, they can get the packet core and build their own network without ever involving AT&T, Verizon, or T-Mobile, if that's what they want to do. There could be opportunities for the fiber and data center guys there that don't necessarily involve the operators. So I think one thing we've done now with CBRS is we've divorced operator from the spectrum availability. It used to be we had to go to the carrier, now we don't.
Right, and I guess you have this additional spectrum coming online just below CBRS, if I'm not mistaken, that could be interesting on that from that perspective as well, correct?
Yeah, hopefully later 2021.
Right.
So we'll see. So we'll be having this discussion again with the next one.
Absolutely.
And we'll probably be talking about the cable guys that didn't turn up for C-band. Will they turn up now?
Right. Well, speaking of cable, the other interesting area we're focused on right now is fiber to the home, and it's sort of the last frontier of fiber, I guess. Maybe no pun intended, because Frontier Communications is going to be coming out of bankruptcy, and we'll be heavily focused on building fiber out in their footprint. Windstream focused on the same thing. Lumen, AT&T's talked about spending more in fiber as the biggest wireline player. So I think they all have ambitious fiber plans when you look at 2021. And cable's got a stranglehold on the broadband market right now. Anywhere from 60+% market share. So wireline is going to be something interesting to watch over the next couple of years, and how they invest in fiber.
Right. So final question for me is, do you see, interest rates are very low right now, but the lowest they've ever been. Do you see that the digital infrastructure industry, data center, fiber, mobile, tower, taking advantage of that? Because likely it's going to be like that for the next few years. So do you see that they're going to increase their debt in 2021, 2022, or what are your expectations as a whole?
Well, I think that, I don't know that that necessarily means they're going to spend a lot more in CapEx. It definitely helps someone like Dish, who needs access to capital. But I think it really means you're likely to see more consolidation. You're likely to see infrastructure funds tap into even a deeper supply of capital, and look at more fiber opportunities, look at more data centers and towers, not only in the U.S. but internationally as well. So I think it probably has more direct impact on M&A and consolidation rather than capital investment at this point. So like I said, it helps some of these guys on the outskirts like Dish, for example. But I think M&A and consolidation is the first area I would expect to take advantage of these crazy low cost of capital out there.
Right. Well, good. Well, for those watching, we've been chatting with Davis Hebert, who is, get it right, Senior Analyst of TMT for Credit Sites. Davis, good talking to you as always. Thanks.
Great. Thanks, Ian.